been quite interesting and almost exciting this week whilst I've been making these videos. This is akin to riding bareback on a horse because I usually use a lot more indicators, but the channels and the trend lines I've shown you have been very successful, and therefore I have been taking trades. I have shorted this CAD at 100 as per the conversation of the day. I think I actually got filled at 99.94. My stop is just above this recent high at 1040, and the reason I took it was I took it down here because price started to stall, and as we've seen before on these 4-hour charts, when this starts to happen, usually it works in our favour. Now, will it work? No idea. All you can do in Forex is make a plan and then trade the plan, and you are working purely on percentages. Some of these trades will lose and some of them will win. If the risk-reward ratio is at least 1 to 2, then you actually can win less than 50% and still be in profit. So on that one, we will come back to this and look at this in the next day or two. What I will do is that when price gets hopefully down below 99.69, 99.70 area here, this recent low, I will move my stop to entry or to entry plus 5 pips. I'll make a decision a little later on that one. GBP USD, what did it do this morning? It has come back down, almost touched the line to the pip where we were looking for a long. You will notice I have added a daily range indicator. Now, I'll get this indicator made a little more simple. You don't need all this, I don't use this. This is current price, this is the spread, this is an Alpari platform, that's not a good spread. But today's range has been so far 74 pips. Yesterday was 121, so there is room for a 50 pips extra movement either that way or that way. Having said that, the average for the month is 111. So there is room for another 20-30 pips worth of movement here. Hopefully it will be going up as we are looking only for longs at the moment. This is the Euro USD, and notice how similar, so as I flick back, notice how similar the pattern is for the pound dollar and the euro dollar, almost identical. I have just taken this trade on my live account because price came down. It touched a major area of previous support and resistance, as you can see here, with the intersection of that daily trend line that we put in place the other day. At the moment, this is a spinning top indecision candle. However, if you were trading purely off the 4-hour chart, you either have to decide whether you're going to be aggressive and just take it, or you wait for this candle to close. I've just taken it anyway, but on the 1-hour chart, you did have this candle came down, touched it to the pip on this trend line, very next candle indecision, and this candle now has started to go back up again. For confirmation of the Euro USD trade, we have the Swissy. And as you know, as the euro has been going up so far this year, 90% of the time the Swissy has been going down. And this was interesting here last night. When price starts to break out of an area after a major move, you do start to look for breakouts. However, what kept me out of going long here is this major area of previous support and resistance. Also, if you are looking at a potential breakout, particularly in this kind of area, I would wait for the 4-hour candle to close. What often happens is you get a spike up and then the move will continue down. If I was to start thinking of longs here, I want price to actually break above the whole number of 9100 before I will even contemplate it. This is the dollar yen, and this is the reason I put this range on today, because today's range so far today, this pair has done a move of 87 pips. Yesterday was only 58 and the previous 30 days is 77. So it has already moved more than the average for the month. And when I was showing you yesterday, I was showing you that this was the crucial area. And I explained that I wasn't going to be going along here because it was too near this upper trend line, and that if price broke, we would consider a breakout and a pullback for a short. But because this is so near, and because this average daily range has moved, you could have taken this and it would have won you 40-50 pips off. But I was more interested. I've been interested to long at 8200 for the last few weeks. It got down as far as 8208. I had an order in at 8210, and because the spread had just fractionally missed it. But if price gets down to 8210, I will long this pair. But this is a little bit more advanced. This is an either or and taking into account other factors. Daily range is important, and we will have days when suddenly price will crash through it, and I have seen pips movement of hundreds and hundreds of pips on the dollar yen, but it is not the norm, and therefore probability says this will probably not fall below 8200 today. Watching and waiting, I will update you as these moves develop. I have shown you this week how to look at candlesticks, Fibonacci, trend lines and support and resistance, and from just using those indicators we've had a phenomenal week. And when you look back on the pound with this particular chart, you had the opportunity, this channel is approximately 170 pips, so you had the chance of 170 pips, 170 pips, a reverse trend 170 pips, 170 pips, all with small, very tiny stop losses. Therefore, you are risking on average 25 pips to win 170 pips overall, which is a phenomenal risk-reward ratio. Of course, trades don't always win, and you have to accept the fact that losing is part of Forex, but if you can aim for a very good risk-reward ratio, then you are halfway there. How to manage trades. What I do with this kind of trade is I try to get my stop to entry as soon as possible, and therefore my standard practice is that once the price has got 25 pips in profit, I tend to move my stop to entry or fractionally below. Sometimes I will go just 5 pips below. Standard practice is open 2 trades, move your stop to entry after 25 pips, and at that point decide whether to take half of the trade off and bank some profit, or whether to simply just let the trade move. I tend on a daily basis to take half of the trade off. It does play with the risk-reward ratio, but it means you bank some profit. On a big move like this, then the inclination is to let the thing run, because we've seen on previous occasions 3-4 times now that this keeps going and hitting this upper trend line. So from here, had you entered here, moved your stop to entry at 25 pips, you would definitely be looking to get out here. You will be looking for the upper trend line. We were looking for the 160 whole number and previous support and resistance anyway, so that is clearly your overall target. And for targets, I always go, for example, if I'm aiming at 160, I will place my target at 159.90, 10 pips below. Forex can be very frustrating, as you know, and often will just not quite make it. When it comes to a counter trend trade here, again, you're looking at 20-25 pips stop. At this one, I definitely take half off once we've got into profit. And the reason is there's always a chance that it's going to just come back up again and then carry on. Therefore, the best way I've found is stop to entry 25. It's a risk-free trade. Take part of it off and leave the balance to run. Had you done so, you would have ended up with 170 pips reverse trend, which is incredible. Again here, if you have entered here and moved your stop to entry and you're just letting it run because you're hoping it's going to go up here, you have to have the psychology to be able to deal with the fact that at one point this was 80 odd pips in profit, but it then pulled back and almost took you out. Therefore you have to decide whether you would have got out here when the candle started to change and then re-entered here, or whether you just left it. When it comes back down here again, you enter more, because bear in mind, this trade is now risk-free, and therefore you are quite entitled to open another trade. Had you done that in this instance, you would have had your 170 pips out of this move, and we're almost up for the 170 now from this move. One other thing to note here is the price came up to the 160 again. In the 160 area, we were thinking of potential shorts, and certainly thinking in terms of this as being a target rather than this at this point, because of the fact it was so strong. But what do? This is why you must wait for candles to close. This candle has closed clearly through 160. Now we start to think in terms of a long on this pair, and we will then start to look for clues here for a potential bounce back down. This is the Euro USD. And the other day I was saying that although price was starting to break out of here, it didn't close outside the channel. And again, hugely significant. At one point, this candle was down here. It looked like the euro dollar was going to break, and therefore we're expecting a big fall. But what I said to you is wait for candles to close. Candles spike down, it's closed inside. Down, inside. At that point, we are still going long on this, guys. We have not broken below, and therefore we're going long. We are above 78.6 still. We're looking for longs. That would have kept you out of a loser. Equally, at the same time, the Swissy was doing the exact opposite. And what was happening here? The Swissy was struggling at 61.8. Now, we did have a candle actually closed outside the trend line, but what I said to you, unless it broke here, the 78.6 and the 9100 cycle level, I was still looking for shorts. Reversal candle here, price moves back down, we're now back into this channel. This is the all-important area now. 90, just below here, is the recent low area. It's a whole number, it's a psychological number, major support and resistance. If price comes back to here, I wouldn't short at the moment, because you're going to be risking 20 odd pips and your reward is only 20 pips. I want a decent risk reward. So for me, what I will wait for on this pair, if price does break below 90, I will then look for a pullback and then look for a major fall. This is the dollar yen. The dollar yen the other day, we were looking to long 8200 because it was major previous support and resistance, and it was a whole number, and we had 61.8 fib just below. This was one of those trades where I moved my stop to entry, took half off, left the balance to run, and it's just been taken out. So I banked some profits, but it's been taken out. This is still the crucial area. I will wait till Monday now to see what happens. Once again, I am only thinking in terms of a long until this 78.6 fib is broken. This is the CAD. Now the CAD, I showed you during the week how important 9900 was and a likely place for price to bounce back up. A, this kept you out of a losing trade because of the support and resistance and the 78.6 fib. And B, it gave you an entry to go long. Now I shorted a couple of days ago here. This has dragged on forever. Told you I'd put my stop up here at 1040 odd out of the way. Price finally turned back down. I have now taken part of my trade off, stop to entry, and I'm just letting the balance to run. Fingers crossed. I now hope it's going to get down here, and hope is the only strategy left for me now.